Whitney, Bank of America put out a report saying that for 2019, retail investors have been net sellers. Institutionals were basically flat. So most of the buying, this is obviously a record high market, most of the buying came from corporations doing buybacks, probably fueled by the Trump tax cuts. What would you say to the hypothetical investor, maybe a slightly balding, average fashion sense hypothetical investor wondering what to make of this?
Yeah, but look, we're sort of in a strange market. We're approaching the 11th year of a long bull market. There hasn't been a lot of volatility, a lot of complacency, and interestingly, in 2019, the S&P 500 with dividends was up more than 30%. But interestingly, corporate earnings were flat. Yeah. So what does that tell you? Corporate profit margins are near record highs. But if earnings were flat and the stock market was up 30% it means that it was all due to multiple expansion, right? And to some extent, some of that makes sense in the interest rates are at historically low levels. Where else are people going to park their money? But it makes it a hard investment, I'll tell you, for a value investor like me, a hard environment, I should say.
And it's the companies parking the money in 2019, too, not just the retail.
And of course, keep in mind, historically, corporate share buybacks tend to peak right at stock price peaks.
At the worst possible time.
Exactly. And then their buybacks disappear, when a recession hits, right? So it's, I will say that I have had in my 20 plus year career, I had a terrible feeling about the markets, positioned my hedge funds very defensively at the time of the internet bubble, right near the peak of the housing bubble, because I really felt like the market and the economy were going to go off a cliff. I do not feel that way today, which makes it hard, because if I did feel that way, I'd just go to cash, I'd ramp up my short positions, buy gold, things that would do well in a big downturn. But credit to the U.S. economy, it's pretty healthy.
So shifting gears, staying positive to your own baby, Empire Financial.
Yes.
What's a positive surprise for you in 2019? What was something that happened that was better than you expected?
Generally speaking, it was a brand new business, and I get to do what I love to do, which is investing without the stress and brain damage of actually managing other people's money. We let our clients manage their own money, and we advise them and give them great stock information and ideas, but without both the administrative hassle and sort of the stress of actually taking custody of other people's money and all. So, the happiest thing that happened just in the personal / business front is the business launched successfully. I love what I do. I think I found my sweet spot, and I realized, how for 20 years when I was running a hedge fund, how stressful that was and how it almost made me think short term, because I got to report to my investors every month, and that even though I had great long-term oriented investors, I felt short-term pressure because I was reporting to them every month. So that's been a nice surprise. And look, our portfolio's done well. I mean, most importantly, are we delivering value to our subscribers?
Teddy Roosevelt once said that it's not the critic who counts. Credit belongs to the man who's actually in the arena, his face marred by dust and blood and sweat, something like that. Now, I'm talking, of course, about Tesla. In this case, you are the critic who is in the arena, and anytime you make calls, you're going to be right, sometimes and wrong. Sometimes. I think you had predicted Tesla below $100.
Yes, when it was at 300
by the end of 2019,
April or so.
And obviously, it ended the year closer to 500 something. But again, that happens. Looking for, and to your credit, you didn't actually short Tesla in Empire.
And by the way, here's the key thing I want to point about that, which is everyone makes mistakes. The question is, as an investor, can you recognize when your investment thesis has become impaired and exit and just realize,
and you know quick
what? Live to fight another day. Literally within an hour of when they reported a profitable third quarter, my investment thesis is that there would be sort of a pop and drop in demand, and that they were going to continue reporting losses throughout the year as they had reported historically. Literally the moment they reported a profitable third quarter, and it was cash flow positive as well, critical for an indebted early stage company, I realized, wow, this has just blown a big hole through my investment thesis. The stock that day popped from around 250 to around 300. And I put out an email to my 30,000 daily subscribers. And keep in mind, as you point out, Tesla was not, we don't do shorting in my Empire Investment Report newsletter, but it was something I was very publicly out there on. and I had made a big call, and interestingly, the stock went from 300 to about 170, and then
You're
sort of
close,
rallied
yeah,
back
yeah.
right to where I said. This was now maybe 5 months later, and I realized my investment thesis was now in question, that there's now the company reported a profitable quarter. All the bulls on Tesla, and this is a real cult stock, could drive this stock through the roof. So within an hour or two that morning, as the stock was trading up, I put out, it was the lead item in my email to 30,000+ people, saying, I'm not saying this is a long, but this is not a good short, right? Cover your short. So people who have followed my advice, well, they didn't make any money, but they didn't lose any money either, by the way. In a period of time when the S&P was up 6 or 7%, I was flat on my Tesla short. And so that underscores, well, one, I can be wrong like anybody, but two, I can admit it. And I can pivot on a dime when there's new information that blows a hole in your investment thesis, long or short. You gotta react. You can't just dig in your heels and pretend like your thesis is still
Which
intact.
is probably a lot better than, I'd say 90%. This is not just shameless pandering. I mean, most investors don't have the self-awareness or the ability to avert that consistency bias, I would say. But let me look forward now. Okay, go ahead.
Well, I was gonna say, I've always noticed the best investors combine enormous self-confidence, which you have to put yourself out there, to manage other people's money.
You're saying I'm right and the market's wrong.
Right, and that is in and of itself, the purchase of any stock or shorting of any stock is an act of arrogance. However, the successful investors are able to marry that confidence / arrogance with humility. So look at Warren Buffett, who on the one hand says, my idea of a group decision is looking in a mirror. That is, he knows he's one of the best investors in the world. He has enormous confidence. On the other hand, he's always saying, somebody's out there making money on cocoa beans. I don't know anything about cocoa beans. It does not bother me at all. He's always, he's incredibly humble.
In the spirit of humility, if you were looking ahead at 2020, I had to guess what thing you're most likely to be wrong about. What would that be?
Wow, that's interesting. Because look, I have not made any big calls recently. I mean, I called.
It was only January.
I called Tilray at the top, and it went down. I predicted down 90%, and sure enough, it was down 90%. I predicted Beyond Meat would go from almost 200 to below 100. That happened. So Tesla was really the only big call I've gotten wrong.
And you may not be wrong forever on that.
It's true. I mean, I think Tesla has now. I don't think there's any chance Tesla goes to zero anymore. As recently as 6 months ago, there was a real chance. And by the way, generally speaking, you do not want to be short any stock unless you think it's a zero, because otherwise it's just too hard. When you're wrong, you just get clobbered, right? You need to have those things that just fade away to zero. If I'm really wrong on something is that my general view is the market just sort of muddles along. If I'm wrong, the market could really spike upward, or imagine, we came very close to a real shooting war with Iran, right? Some sort of geopolitical event like that, or the election of a President Elizabeth Warren or Bernie Sanders. I'm not predicting either of those things, but if I'm surprised, there could be some big macro event that moves the market, particularly to the downside, 11 years into a bull market.
Not surprising. Last question.
Yes.
You list certain criteria to think about when you marry someone in some of your materials, which I think are very good. And they're not just
and I'm
good.
writing a book on it.
Oh, you are? Oh, great. I'm going to buy the book.
Yes, not just on that, but about avoiding calamities, of which marrying the wrong person is one of the biggest that can ever happen.
One of your criteria is, do kids and dogs like this person, which is true not just for marriage partners, but just people in general. I think kids, they can't articulate things, but they can sense a certain genuineness of character. Here's my question. Well, and generally, I found that people who are not liked by kids and dogs don't really care that they're not liked by kids and dogs.
Right.
But if you are a person who is self-aware and realizes you're not liked by kids and dogs, do you think it's possible to change yourself to be liked by kids and dogs?
Yes. Generally speaking, I think it's more likely. It's interesting, the first of the 12 questions to ask before you marry somebody, question number 1 is, it's a series of questions related to, does this person have a good heart? Are they a kind person? Would anyone say that they have a mean bone in their body? And then the last group of questions related to just general kindness is, do dogs and children like this person, right? So I guess I would reframe the question to be a little bit is can a self-centered, narcissistic, sort of a jerk, right? Can they change? And And yes, I've seen it happen. Interestingly, I'd almost cite Warren Buffett, who, as a young man, was very shy. He was never like a bad guy. Nobody disliked him, but he was very socially awkward and all. And he decided, he talks a lot about developing good habits. And just one of the most important habits you can have is to treat other people with respect and kindness. The later you wait to try and improve yourself in any way, whether it's the habit of just getting regular exercise, of having a reasonable diet, of not smoking, using drugs, or excess alcohol to excess. All of these habits, day in and day out. Buffett, one of my favorite Buffett quotes is the chains of habit are too light to be felt until they're too heavy to be broken. And so what it means is generally as a young person, you develop your habits.
Over time, we become our habits, right?
Yes. Yeah.
So, Whitney, always a pleasure, wise words. Check out Empire Financial. And what about you guys? Do you think narcissistic, self-centered jurors can really change? Let us know. And thanks for watching.